Good morning, everybody. Welcome to my trading game plan. My name is Gareth Soloway, Chief Market Strategist here at verifiedinvesting.com. What a morning, folks. We had the big sell-off on Friday just before the 3-day weekend. That again coming on the back of not only starting, and I think this was the key, Nvidia earnings showed a crack. The data center revenue for Nvidia missed by a fraction. Everything else was golden, but it opened that small crack that when Marvell Technologies, MRVL is the symbol on that, when they reported bad earnings in the same sector, that opened the wound. And then you throw in the Alibaba news on Friday where they developed or are developing their own AI chip that should rival Nvidia's, and the floodgates began on Friday, and that has just continued into this morning. First trading day of September, markets are in free fall. S&P is down more than 1% on the day. Nasdaq is down over 1.5%. The key trend lines we've been watching are on the border line of breaking. And if they do break and confirm, we should see a significant decline here in the near term. All right, over the weekend, more negativity. What do I mean by that? Well, for the S&P 500 and the Nasdaq, we saw Trump's tariffs being basically called illegal by the courts. Now it's going to go to the Supreme Court. But again, you could say, well, isn't that good for businesses? Well, the essence of it is business needs certainty. Any sort of uncertainty makes them unsure of where they should price their goods, and that is not good. The best thing for the markets is certainty. You throw in then, this is now the month for the Federal Reserve to possibly cut rates. What's the jobs data going to be this week? And then ultimately, we saw Putin, Xi, and Modi all meeting and having a great old time together this weekend, and that again puts the US on an island of its own here, and that again is making investors nervous. So suffice it to say, this perfect fantasy that everything was okay with the VIX being down below 15 is being shattered. And I told you guys last week, I said my favorite trade right now is to buy the VIX or the VXX, buy volatility. That is going to be the key. It's way too low here, and all of a sudden we're seeing the VIX from Friday to today up $3 on the VXX. Great move, and it should go higher. All right, into the charts we go, guys. Take a look at the S&P 500 futures here. Look at the free fall. If we go back to Friday, this was our down day on Friday. This was Monday where the markets were closed, but the S&P futures traded. And then look at the rollover this morning, a massive fall here with, again, the S&P down over 1%. Flipping over to the daily chart, let's go to the daily S&P. And what were we watching here, folks? Here is your wedge pattern with a 1, 2, 3, 4 hit of the trend line. We know the fourth hit was a 50-50 chance of breaking. As we know, it did not. The question is, where are we going to be opening today? Based on the S&P, we will be opening at or below the trend line. The big question remains, where will we close today? Looking at the NASDAQ here, you can see same thing, free fall to the downside. One of the things we know, look at this, 1 hit, 2 hits, 3 hits, 4 hits. The fifth hit, which we hit on Friday, was a 60% chance of breaking. Look at where we're trading pre-market. We're way below that line. So again, the NASDAQ looks like, unless it stages a miraculous recovery today, the NASDAQ will break the trend line. Then we start watching for confirmation to confirm the breakdown. And ultimately, we could be setting up for a solid anywhere between, I would say, 5 and 10% near-term correction. I do have a level here I'll be watching. You can see this sideways consolidation going back to July of 2025, and then the gap fill here from August 1st of 2025 at 553 and change on the QQQ. Now, again, we flip over to the US dollar. The dollar daily chart getting a bounce today here. We can see it broke down last week, and we started to see some rolling over action. But today, there is a definite scared mentality among investors, and investors, both domestic and globally, are running for the safety of the dollar. So near term, we're seeing a bounce in the dollar. The question is, where will we go? I still remain pretty steadfast that the dollar longer term and even near term is likely in a potential kind of consolidation mode here. And if we just bring this out to here, you can see again kind of a parallel pseudo channel that we're generally trading inside of. And so I do think the dollar weakens, especially longer term, but near term, it is still a safe haven when things get scary. And we're certainly seeing scary today. Now, listen, one down day or two down days doesn't make or break anything. But what you can see here is when too much greed envelops the markets. When you see the VIX getting down towards 14, which shows complacency. When we talked about, and these are things that I announced in this My Trading Game Plan last week, we talked about zero-day options, how zero-day options were now making up more volume than ever before over in the overall options market. That is, again, gambler's mentality, right? It goes from smart investing to gambling. And then you look at other factors like valuations and margin. Margin hit its all-time high recently, which is people borrowing money to invest. And again, those are all telltale signs where my alarm bells in my head start to go off and say, wait a minute, while the market could continue to grind, and I'll be called a crazy for saying the markets could decline, these are the signals that historically in my 26 years of trading have taught me to be on high alert for. And I really, again, listen, I will not be right all the time. I'm using charts. Charts give me probabilities. But if I can just give you guys a little of my knowledge and a little of my hard-learned lessons, then I've done my job here in this My Trading Game Plan. All right, back to the charts we go here, guys. Let's take a look. The 10-year yield is also getting a bounce. And this is very interesting because the 10-year yield is going up, but generally when people fly to safety, the 10-year yield goes down when people are buying bonds. So this is going in the face of the US dollar move just a little bit. And this is a little concerning to see yields going up when fear spikes. Yields should be going down when fear spikes because people run to the safety of bonds. They're not doing that today. That's on my radar, and a little bit, I'm basically putting a red dot next to that in my head as something to monitor over the next couple weeks to couple months. Why is that happening? Is there some sort of issue developing in the bond market that we need to know about in terms of U.S. Selling its debt? Are countries maybe potentially Modi, Xi, and Putin all getting together with other leaders from Iran, North Korea? Maybe this is more of a stand and the markets are worried about these countries like China and India not being as willing to buy our debt and pushing us to the outskirts. And again, not saying that's what's happening, but I have to, as a trader, understand that that is a factor that I need to monitor. Okay, so again, back to the charts we go. Nvidia, I mean, this was one of the best indicators, guys. And again, people always call me crazy when we're at all-time highs or 52-week lows, and I'm going the opposite way of the crowd. But we talked about this literally 3 weeks ago, saying that when this trend line breaks, you need to be on high alert. It breaks, and then it goes up. And the bulls start to say, oh, no, this is just continuing up. This is what happens. You get the initial break, then the mentality is buy the dip. It floats up, but the trend line has been broken. And ultimately, look, Nvidia trading now below $170. And there is support here. But if we break this, you'll head down. I think we touch probably at least 167 today. There's a gap fill here. And I'll be monitoring for a day trade 164.10 for a day trade long on Nvidia. And by the way, I'm a trader, so just keep that in mind, is that there will be days where we're down significantly and I'm going long intraday. And there'll be days where we're up significantly and I'll be going short intraday. It's about the levels, the probabilities at those levels. And again, my job is to convey that to you. So watch that one. Definitely, there might be a high-risk trade at around 167, this gap fill. But a long trade for a day trade at 164 and change looks very, very good. Ultimately, you guys know, I said last week, in fact, this is the same trend line that I showed last week. Where do I think Nvidia is going in the near term? Back to 153, because that is the former scene of the crime. That was your all-time high from 2024. It makes sense that you break out and you retrace. Do you guys see how this is? Basically, I'm using the same mentality here with this trend line. Here we broke down and we retraced, and now we're coming back down. Here we broke out, and now you're retracing here. It's just using that same thought process over and over and over again. and not trying to reinvent a wheel. You're just looking at the charts, understanding human mentality, psychology, and how charts work. When they break these key levels, they get a little bit of a move, then they retrace, then they get the bigger move. And so here you had the breakout. Now we're getting the retrace, and then we'll have to see, does that then catapult Nvidia to new all-time highs, or does it bounce and form a bear flag? And do we see a move to the downside? MRVL, this was the big drop on Friday that sent ripples through the AI chip sector. Obviously, the Nvidia data center numbers just missing by a fraction, kind of, as I mentioned, opened that crack in the ice, if you will. And then Marvell Technologies' bad earnings really catapulted that, plus the Alibaba news. Now, in terms of a level on this, where could this be going? Well, as a day trade, I really am liking today the 59.20 level right here, 59.20. There's a couple pivot lows right there. But on a swing trade basis, I'm not going near this thing until double bottom. There's a lot of potential downside here in the charts that we have to be monitoring, especially because markets remain pretty close to all-time highs. Just imagine if you get a 5 or 10% correction in the S&P or the Nasdaq, where at that point is Marvell, MRVL. This was a great setup, guys. For those of you out there, notice where was your high on Palantir? Notice pivot high to pivot high all along this trend line here, going back to March of 2025. And then once we dipped, what type of pattern formed here, guys? This is classic TA, very simple, sharp down move, right? Well, down move there. And then what else do we get? We get this sort of pattern off of it. That's a classic bear flag. And it should, and I say should because it's never 100%, but probability-wise, it resolves itself to the downside. You can see the bear flag forming just above support, and support 2 trend lines meeting underneath, bear flags, and now we're starting to break down. Palantir is trading at 151. The key level to watch will be the low from about a week and a half ago on August 20th, and that will be at 142.50. That's going to be a big level to see if Palantir breaks or not. If Palantir breaks, my guess is you'll go back to about 125 to 126, which was your prior high before a major correction. That now becomes your standing level of major technical support. All right. All other stocks are taking a beating here. We're seeing Tesla coming in sizably here. Now, Tesla, look at this. It's trading down. Really, it could come all the way back down to this area around 310 to 309, but that should be a very significant level of support on Tesla, as again, it would be a retrace to both trend lines of the former wedge pattern. Other names getting tattooed today. I mean, basically everything, folks, from Meta to Microsoft, to Broadcom, Taiwan Semis taking a hit, Netflix is down, again, Amazon, Google, Apple, they're all dropping here. The big one here, the SMH, we have this head and shoulders pattern. Look at this, shoulder, head and shoulder. Guess where we're trading today? Look at where we are pre-market. We're right at the neckline. This is epic because if you break here and you trigger the head and shoulders, which is about at 282.30, we'll call it, if you close below that, it does open the door for a move down, a measured move on the SMH, the semiconductors, to let's do a measured move here. If we break right there, today would be right there, we'd be looking at 260. So another from current levels, about $23 more to the downside. That's if we get a close below, let's call 282. So we'll watch that very, very closely today. But that would insinuate more downside near term on Nvidia, which potentially tells us we could go back to this level on Nvidia at 153 if the SMH triggers that head and shoulders pattern. All right. So again, really interesting price action today. I think today what you're going to be watching is where do we see support? Or where does money flow? Does it flow into the Russell? Well, the Russell's down 1.5%, so it's down the same amount as the QQQ, so it's not flowing to the Russell 2000. My guess is you're going to be looking at stocks like Pfizer, these beaten down kind of longer-term plays all the way here. Now, Pfizer has not broken out yet, but again, it's pulled back last week with the stock market kind of generally grinding up until Friday. Do we see a bounce to the upside and an attack of the 26 level? Other names out there, again, generally defensive names, KHC, Campbell's, CPB, these type of names for me. You can see, by the way, Campbell's broke out and then retraced. and Campbell's is flat to positive today. So those to me would be the places where we might be seeing some technical levels to play or be on the upside while the market is dropping. Now, we got to go to gold. Look at gold. All right. Look at the retrace to the scene of the crime on gold. Double top, upsloping trend line, boom, and look at what's forming. Now, if we close low enough, we're going to get a topping tail on gold here, which is kind of counter to the market. Like you'd think if the market's going to sell off, gold would be ripping higher. Now, it is higher today, but it is up only 1%, and it's well off of the highs. So there's some really interesting price action here that we have to monitor. The other thing that has me skeptical here on gold is the GDX. The GDX is going to open just below this parallel, and we can see that when you've hit this parallel, you've had a big pullback. The GDX is also short-term extremely extended. And so again, I'm going to be watching a Pierce of 65 on the GDX. I think if you get to 65, the GDX is a short here. All right, listen, I love gold longer term, but until gold confirms above that double top and above that upsloping trend line that we just talked about right here on the gold chart, then again, this is resistance until proven otherwise, just based on technical analysis. Another chart to monitor, look at Newmont Mining here. Newmont Mining, I have a big trend line. Look at this. We're basically right up onto that 76 level. Look at how extended Newmont Mining is. So the miners actually are nearing a shortable level. And interestingly enough, Newmont Mining is up 30% above its April highs, while gold has not broken its April highs. So just, you've really seen the miners take the lead here, but it also makes me think the miners could be due for a pullback. Don't worry, we'll get to Bitcoin, guys. I did not forget about it. Look at silver. Now, silver looks to close above this trend line, but it must confirm. It must confirm a breakout. So we'll watch, and I'll keep you guys updated on this. But silver, again, a great pop on Friday. Yesterday, it traded as well. It was up. Today, it's pulling back a little bit. It's all combined into one candle on the daily chart here of the CFDs that I'm using. But nonetheless, keep an eye on silver. Does it stay above basically the $40 level? If it does, let's see if it confirms the breakout tomorrow. All right, next up, let's look at oil here, guys. Oil, interesting chart on oil. You can see it popped substantially above this trend line, but look, it's already retracing back into that line here. And again, we'll be monitoring to see if we get a close above this, basically this $65 level or not. Natural gas, let's take a look at nat gas here real quick. And nat gas, after pushing briefly above this little bit of a level, almost kissing this next resistance that I said would be really heavy resistance. It was my upside target. It technically missed by about 4 cents, but so be it. This again becomes resistance, and now we're trading back down on nat gas. Again, I still don't have a great read on nat gas. It never got to my $2.63 buy level down here. So again, for me, I'm just waiting patiently for a good setup. Now let's turn our attention to Bitcoin. Bitcoin, again, is basically flat on the day. I did see some little bit of hints of a safe haven trade in Bitcoin earlier today, with it was bouncing up. Notice how it's not down today, even though the stock market is down pretty substantially. So there might be a little bit of safe haven action going on here, but I'm still not buying the full safe haven. If the markets dump significantly and keep dumping, it's going to drag Bitcoin down. I'm waiting patiently for a pierce of 100,000. I will be looking to play it as a swing trade long, especially if we come into that level in the next few days. Quickly looking at ETH. ETH again, guys, continues to be relatively strong here comparatively to Bitcoin. The key on ETH is, can it hold the 4,075 level right here? If it breaks that, it should trade to about 38.75. But again, in all fairness, ETH continues to look relatively strong. The one thing I'm watching here, look at this, guys. Look at this trend line. You can see right along here, and look at what we're hitting. So we really, really, if you're looking at the upsloping trend, and trend being trend line, we'd rather it not break 4,200, but if it does, it needs to hold these next couple levels right down here. Man, oh man, what a morning here. Let's flip back to the ES chart. I just want to take a look at the S&P futures. Looks like the S&P futures here. Oh, I didn't bring up the ES. Here we go. There we go. S&P is getting a small bounce off of the lows, but we are still set up for a major down day on the markets. All right. Now, listen, we don't know where it's going to close. The close will be instrumental in my analysis. We need to see on those daily trend lines, the wedge pattern on the S&P, the parallel trend line, bottom base on the NASDAQ. Where are these going to be closing, or where would we see the markets closing? That will give us a lot of information. As always, folks, I will keep you in the loop on everything I see in the markets. But suffice it to say, it should be a good trading week. Volatility is back, and that is what us as swing traders and day traders crave. It means we can make a lot of money. So come over to Verified Investing, guys. All charts, no BS. All charts and probabilities. And look at the swing trade services, smart money stocks and ETFs for swing trade, exact entries and exits on swing trades for stocks and ETFs. We have smart money crypto, same thing for crypto, swing trades on crypto, exact entries and exits. Commodities, entries and exits given out, plus videos. All of the services have in-depth institutional level videos. And of course, we have options as well. Some of our options are going to do pretty darn well today based on the market drop. Have a great one as always, folks. Thank you so much from the bottom of my heart for tuning in, supporting us here, supporting this no BS, just charts mentality. It does change lives. It changed mine, and I hope I can help it change yours. Have a great one. Take care.